STAG Industrial is one of my favorite investment opportunities today in the REIT sector. This is a REIT that invests in industrial properties, and it has gone through a major transformation in the recent years. It has greatly improved the quality of its balance sheet, it has also increased the quality of its portfolio, it has lowered its payout ratio, its rent growth has accelerated, and I think that we are at the cusp of seeing all of this reflected also in its dividend growth. I think that the REIT is going to announce some major dividend hikes in the near term. Despite that, the REIT is today still priced at a low multiple of just 14 times its cash flow, which is nearly 2 times lower than some of its peers in the industrial sector. This is because the market has mostly overlooked this major transformation. Is today a good time to buy shares of STAG Industrial? That's what I asked recently the company's CFO at the Citi Global Property Conference, and in today's video I'm gonna share this exclusive interview with you. Now make sure to stick till the end of this video, because towards the end I'm also going to share my thoughts on STAG Industrial as an investment opportunity today. And finally, still before I get into it, if you could please like this video, it will help me a lot. It will also show me that you want to see more management interviews on the channel. They're not easy to organize, as you can imagine, but I think they are very valuable in most cases. So please, if you could like, I would really appreciate it. Thank you. So why should investors invest in STAG Industrial today?
I think what the market is missing is the fact that not only have we accelerated our internal growth, our cash same story, it's here to stay. It's sustainable. At IPO, it was 0. 7 years ago, it was 1%. Last year, 5%. This year, guidance 4 to 5%. That is a re-rating quality. That is a big driver. We're retaining cash flow. If you had asked people, what do you think about STAG 10 years ago, they would have said a good allocator of capital. I think if you ask that question now, people who are paying attention would say, good industrial operator. I think the market is starting to come around to that. That's a huge value proposition, and that's the reason why you would want to get into STAG right now.
Right, and one quick follow-up to that. Today, I think your valuation multiple has caught up a little bit to your peers, but it's still priced at quite a big discount. Do you think that we're going to keep seeing this discount close down over time?
I do, and I don't think that we're going to represent that we're going to bridge that valuation gap tomorrow.
Yeah,
I think what's happening is the investment community is getting used to the new perception of STAG. We did a lot of changes to this portfolio over the last 7 years. Had we done all of those changes in 1 year, I think we would have gotten an enormous amount of credit. It took us 7 years. So I think part of it is, okay, you did it, I hear you, let's see it again.
Yeah.
Once we get the credibility of this is sustainable, this is where they're going to operate, I do expect that valuation gap to start narrowing.
Very nice. And one last one, if I may. The one pushback that I always get from retail investors is that you're not growing your dividend as fast as your peers.
Yep.
But now that you've brought your leverage down, your portfolio quality has improved, your payout ratio is down, do you think we might see a change in your payout ratio in the future?
Yeah, it's what we messaged 5 years ago. What we wanted to do is make sure we were retaining capital. That's our cheapest form of equity. At IPO, we were retaining $0. 7 years ago, minimal. Now we're retaining $80 million a year. We've actually driven the payout ratio down to a point where we're going to have to start increasing the dividend.
Yeah.
And when we start increasing the dividend, it'll be in lockstep with our cash available for distribution growth. We have risen the dividend every year. Yes, it has been modest, but there was a reason. And I think that we're very close to declaring victory on the reason why we were.
Perfect. Thank you very much.
Absolutely.
Thank you. So what do I think about STAG Industrial? Well, I own a position in the company, so obviously I'm bullish. I think that, as the CFO explained in the interview, the market has overlooked the major transformation that has happened at STAG Industrial. A few years back, it would have made sense to value the company at a lower multiple than its peers, but today this doesn't really make sense anymore because the company is now much higher quality. It has a strong investment grade graded balance sheet, its rent growth is just as fast as most of its peers, the quality of its portfolio has improved, its payout ratio is now low, and I think that the REIT is now in a great position to start hiking its dividend at a much higher rate. I think that the dividend growth is ultimately going to be the catalyst that will lead to a much higher multiple, and as the company re-rates at closer to just 20 times FFO, we could see easily 30% upside from here. While you wait, you earn nearly 5% dividend yield. The company also keeps growing its FFO per share at a mid to high single-digit growth rate, which together, even ignoring the repricing upside, should provide you double-digit total returns. I actually wouldn't be surprised if a major private equity player like Blackstone offered to buy out STAG while it's still discounted. Just recently, Blackstone announced that it was going to acquire another industrial REIT in the UK, and we know from previous conference calls that they really like this asset class because rents are growing rapidly due to the growth of e-commerce, the growing trend of onshoring, and not enough supply being delivered. So again, this is a REIT we are bullish on. It's a REIT that we hold in our core portfolio at High Yield Landlord. Now, if you want to access our full portfolio, feel free to join High Yield Landlord, which is our REIT newsletter for a 2-week free trial. I'll put a link in the description. And otherwise, again, if you could like this video, it will help me a lot, and I'll make sure to get more interviews for you on this YouTube channel in the near future. Thank you very much. Bye-bye.